Right, so now the video's done all the introduction, it's on to the nitty-gritty of the results. So another fantastic year for Keywords Studios, and delighted to be here to share that with you today. Strong performance both in terms of acquisitions and organic growth. So on our like-for-like measure, to give a flavour of the underlying organic growth, we grew 15% last year, which as we become a bigger business obviously becomes a bigger overall number. So very pleased with that, and also as a sort of measure of how we're doing as a business in terms of underlying activity, we're sharing the fact that we've grown the number of clients that buy 3 or more of our 7 services by about 45%, to take that now to 93 clients out of an enlarged group of 646 clients, which I think when last time we spoke we were probably talking about 500 odd clients. So part of that is through the acquisitions we've made. So onto the acquisitions, we've made 11 acquisitions during the year, so we've not been slacking, and that includes 2 of our largest acquisitions, so VMC that we acquired in October last year, and also Sperasoft, which we snuck in just before the year end, middle of December. And that takes our total number of studios up to 42 studios as at the end of last year. We've also, as you know, announced today 2 acquisitions. We've acquired Chord and Laced, which we put together in the field of music services. And we've also acquired a small business in Brazil called Maximal, who operate voice recording facilities in Sao Paulo. So just to update you as well in terms of how we're doing with our integration of acquisitions. As you know, we don't just buy companies and leave them out there. We do get on and integrate them into our services platform. And we're particularly pleased, I'm particularly pleased with the way the guys have got to grips with the VMC acquisition and have integrated that very strongly into our existing facilities and our existing IT platforms over in North America. And Sperasoft, whilst we're not physically integrating studios with that business, it has integrated very strongly already in terms of how it's interacting with the rest of the group, both in terms of business generation, so the sort of sales pipeline, but and also the production side, where it's increasingly using group services to package into its co-development deliveries. I think we've spoken about this before, but our operations in Madrid and in Mexico City and in Paris, where we've had multiple studios, we are integrating those very well across the board. And the Seattle reference is really as a result of the VMC acquisition that I've already mentioned. So the 2017 has been marked really, for me as much as anything, by the fact that we created this new engineering service line through, first of all, the acquisition of GameSim. We then strengthened that with D3T in the UK, and right at the end of the year we added Sperasoft. So that gives us, you know, a team of 200 plus video game engineers. So these are coders that will code video game content. And they help not only video game companies but also those in adjacent areas to do with simulation and so on. So very exciting development for us, and it puts us into a whole new sort of world of co-development services. So the numbers themselves, revenues up 57% to 151 million euros, which is great. It's quite hard, though, to get a feel for the business from those reported numbers. I think it's almost more interesting to look at the pro forma number. The pro forma number for last year in terms of revenues, 225 million euros. So that puts us at effectively at the start point for 2018 with 225 million revenues historically. and we're looking to grow on top of that. We've moved our profit number up very nicely as well, up 55% to 23 million, and if you were to look at the EBITDA number, I think that's showing a 57% increase. Finished the year, as we're in the habit of doing so, with net cash on the balance sheet of 11 million euros. But I think when looking forward a little bit, it's important to note that we've also strengthened our firepower by increasing our credit facility to 105 million from the existing 35 million euros. So that means that we're able to continue to fund these ongoing acquisitions. You know, we did 11 last year. I'm not suggesting we're going to do 11 this year, but we'll certainly do a number of them. And as you know, we've already just announced 3. Looking here at the mix of business for last year, this is based off that pro forma revenue number that I mentioned of 224 million. It's showing a nicely balanced picture. So our fledgling engineering business is already up to 10% of the total. And the other takeaway for me from this chart is the fact that our functional testing business is now the biggest single sector. Whereas if you look back 2-3 years ago, it was the smallest percentage of our business. So we've made tremendous progress there, both in terms of really strong organic growth, but obviously, in particular, the acquisition of VMC during the year has flipped the balance in favor of functional testing. Localization, which has historically been our biggest segment, is now in second place. I'm not going to labour this slide because the intro video very cunningly sort of covered all this off for me. What I would just point out is that through the acquisition of Sperasoft in particular, we've now got a very strong foothold in Eastern Europe, both in Russia and Poland. The interesting thing about that is they've got very rich talent pools, particularly when it comes to engineering talent, and indeed art, but engineering in particular is very strong. So we're looking forward to growing our presence in the Eastern European markets, and we're already seeding in some services that we have elsewhere in the group into those locations. Small progress on this slide. Again, it's kind of, you would have seen it before. The names sometimes change because the backdrop to this is third-party data where they list the top 25 PC and console game companies and also the top mobile game companies. For those of you that are particularly eagle-eyed, you will notice that we've moved up from supplying 8 of the top 10 mobile game companies to 9. This slide sort of always troubles me a little bit because I love all the lines to go up and to the right, and when I see pink lines like this one under limited customer concentration that seems to drop like a stone to the right, it troubles me. But then you have to remember that that's showing the number of clients that account for 10% or more of our revenue. So actually 0 is good in that particular case. So we have no single client that accounts for more than 10% of our revenues. The top 5 clients or so, I think, account for something like 26% of our revenue. So overall, we're a much more broadly based business. We're in a much better place than we were, certainly at the time of IPO, where we had a lot higher client concentration. Steady progress in the number of clients using 3 or more of our services, and that's something that we are actively managing ourselves against. And the margin at about 15% net operating margin remains nicely steady at around 15%. We haven't talked about this yet in the introduction, but I just thought I'd update you on where we see the market at the moment before I hand over to David to take us through some of the financial details. I always like to stress this because I sometimes pinch myself when I look at these numbers. This market is $120 billion in size, and yet it is still an absolute niche market by any sort of measure. The players in this market are completely unique to the video games market, both in terms of the supply side of it and also in terms of the client side of it. So it's its very own market. You don't get clients or players from outside. So in our space, where we're providing outsourced services, it's in some ways a bit surprising that you don't get the Infosys and the Capgeminis and the Accentures of this world playing in the space. But then you have to remind yourself that it is a completely unique behavior. The product itself is very unique, being this kind of mashup of the very sort of highest creative content with a very technical kind of cradle that it sits in. So that puts us in an interesting position, as does the fact, of course, that the market for services is both highly fragmented and also pretty large. It's about $5 billion in size. So the fact that we're doing all these acquisitions and leading a consolidation in the services side is not surprising, and it also has led us to the point where we are the leading provider of services in the games space. Big drivers for us here, and I think most people now are looking at the wider games industry, given that we have more quoted companies in the UK and more sort of gearing up for the same thing. Big drivers really are the fact that games are just getting bigger as the platforms on which they're played become more competent, more capable. So the definition of games are getting higher, which leads to heavier assets, which leads to more time taken to create the assets. More audio in the game than in the past as they strive for a richer experience. And also the fact that games are now a service rather than just a packaged product as they were 2 or 3 years ago. And that puts tremendous pressure on our clients to keep pumping out new content. Because if you don't put out new content, you don't keep the player. The cost of getting the player back is very high. So once you've got a player, you want to keep them, and you want to keep them in your franchise for as long as possible. And that's really good for us. Of course, we know that games, thanks mostly to smartphones, are now played in all corners of the world, and that of course leads to games being localized into more and more languages. So again, very good for us. And then we definitely feel it, and I feel it's a big part of the momentum that I and the rest of the Keywords team around the world feel that we've got going with us, is coming from this sort of move from clients being rather tactical in the way in which they outsource to being a bit more strategic. So as they're dealing with these complexities of different business models that they're dealing with, this relentless requirement for content. So they're reaching to people like Keywords to be a more strategic supplier to them, and less of the just sort of throw it over the wall type outsourcing activity that has been rather prevalent in the games market. All of that, I think, paints a picture of an industry that is maturing. We mustn't forget that this is a young industry. It's only 30 years old or so, and outsourcing has only been around in the space for 20 years or less. So very much a picture of a very large, fast-growing, but niche market that is starting to mature. David, on to you. Do you want us to stand up? Or?
Yeah, if it's... Which is the
right hand.
Right. So again, Andrew's kind of touched on most of the highlights for today. I suppose pleasing that the trading update that we gave you at the end of January, the numbers on revenue and margin are in marginally ahead on that. Again, I don't think it really gives the context of the size of organisation that we are now. Obviously, the pro forma revenue at 225 million is far more clearer picture, and we also touched on the earlier slide of showing the balance across the service lines and the more even distribution of the revenue generation that is now part of Keywords. On the gross margin, down slightly year on year, more a function of us absorbing VMC VMC and its ETS lower margin business. So again, down to the net margin, not a massive effect, but at the gross margin, a slight distortion there, just to flag that up for people. Overheads, again, an area that we continue to kind of make progress in terms of as a percentage of our overall revenues. Again, that's something that we'll look to leverage over time as we get bigger, larger scale, and use that to drive the business going forward. Adjusted EBITDA, again, holding firm year on year, up marginally by 0.1%. Finance costs, as you'd expect, up year on year as the debt facility rose from 8 to 18 million. But again, a large function of that being the higher and increased acquisition activity during the course of the year. Adjusted profit before tax, again, up strongly year on year by 55%. Excluding the following costs as usual, the cost of acquisition, again, higher activity year on year with the 11 acquisitions over 8. Also the size of the acquisitions being a large factor. Share option expenses, again, up marginally. Amortization of intangible assets, again, part of this being a function of larger acquisitions, the likes of VMC, and then that hitting in the intangible line. Foreign exchange losses, again, primarily a function of our wider group, the likes of AP, AR, cash balances getting converted and driving that line in particular. Effective tax rate, again, an area that we continue to try and make progress on. Obviously, traditionally, we've been running to migrate to a more centralised billing structure and leverage the Irish structure that we have. Again, going forward, and as we look into next year, we'd expect to see the decrease in the US tax rate being helpful and beneficial to the group, as well as some of the tax planning that we did in around the VMC deal, that also contributing to an improvement year on year, hopefully. EPS, as you'd expect on the basis of the numbers that we've reported, up again strongly year on year. Balance sheet, again, balance sheet tends to be strong again. Net cash considerations for the acquisitions, large part funded by the successful placing that we did for VMC. Again, particularly pleasing to see the shareholder support that we had in that instance, nearly 4 to 5 times oversubscribed, and also done at a premium relative to the share price. Deferred consideration, a small consideration for Liquid, which was paid out in the year. And again, the acquisition cost was something that we touched on already. MMTCs, again, up significantly year on year. This is probably easiest split into thirds. A third is relation to the underlying business, as you would have known it in previous years. A third of it is for the activities in the fiscal 17 relating to VMC. And then another third is historic MMTC claims that came with the acquisition of VMC as well. Capital expenditure, again, as a proportion of business, relatively small. Continued investment in production systems, testing and computer equipment, as you'd expect. The 2 principal facilities that have seen strong growth and investment year on year are Montreal and Tokyo. And then again, we continue to invest in our own kind of bespoke operating systems that we have and looking to develop those to help drive the growth of the business. Cash flow, again, strong year on year. A slight little distortion, which we've reconciled out for you here. Again, have to appreciate the acquisition-related expenses of nearly 3 million. Some of the exceptional working capital, which we flagged at the time of the acquisition that we had to put into the VMC deal, and 2.3 million in receipts, which were being held on behalf of the group and were passed to us post-year end. So again, you'd see those in other receivables as opposed to cash, but the cash are being paid across. I think what's particularly impressive, and it probably underpins the point Andrew made about VMC and integrating it, improvement in debtor days year on year across the group, coming in pretty strongly at 40 days. So overall, you know, the cash generation, cash conversion, all particularly pleasing. Dividend, again, following our kind of progressive dividend policy, up 10% year on year. In terms of guidance, again, I think Andrew's alluded to this already, continued organic and acquisitive growth expected. Again, I suppose what we would flag in terms of the rate, we're working off a bigger base. VMC was a relatively mature business in terms of what we bought. it was a restructure as opposed to, you know, a significant kind of organic play. And again, you know, we looked to outpace the sector with its kind of 6%, 8% growth year on year. We continue to invest in our facilities to meet demand. Again, we're still to build out the consolidated Paris studios. We now have a new London premises, and we'll continue our expansion in some of the traditional centres that you've seen already, the likes of Japan, Montreal, China, India, which have been the traditional centres for investment for us. Interest expense, depending on how many companies Andrew can find to buy over the course of the year and how much of the new revised facility that we utilise, you can probably expect to grow in line with that. Slight reduction in the effective tax rate, again, 21.7 the previous year, down to 20.5 this year. I think the principal drivers, if we're to get it down in fiscal 18, like I said, US federal tax coming down, some of the VMC planning that we did, and the continual drive over to centralised billing out of the Irish HQ. Again, don't expect to see any change in terms of the strong underlying cash conversion that we've seen in the last 2 fiscal years. And that's broadly speaking the guidance for next year. So I'll hand you back to Andrew.
Thanks. Not quite sure why I'm depicted as an octopus in this slide, but has it got 7 arms for 7 service lines? Or not quite. Right, so we continue to make good progress in building this video game services platform of ours, and I certainly feel that in some markets we've already become the go-to provider of those services, but we haven't yet across the board. So plenty of work ahead of us to get to that point where we can sort of put that part of our strategy behind and move on to the next part. So not to labour the point too much, but we continue to grow very strongly organically. And part of that is the investments that we're making in the underlying business. So it's been particularly satisfying for me to see that we've been bursting at the seams in some of our locations. So we've gone out and we've tripled the space that we had in Tokyo, for instance, and we're already nearly full in that new space. We've significantly increased our footprint in Montreal, which is our largest single facility, again because, you know, we had the choice of either having to try and run 3 shifts or expand space, so we chose to expand. We always have opportunity to run shifts in the future. But also, you know, very satisfying to see fairly new locations of ours, such as Manila, which has grown from the original 23 people about less than 2 years ago to over 350 today. So, you know, very satisfying. And new studios that we got during the year, like Zhengzhou, which is already tripled in size. We moved from a 50-person office to a 150-person office over that. So really satisfying. And then in terms of the acquisitions, yeah, so we did 11 acquisitions. Don't have time to run through them all, but they're all great acquisitions in their own right. We're highlighting a couple of them here. And had we not announced 2 other acquisitions today, we would have had those on the slide as well. So before I go into VMC and Sperasoft, I just want to give a shout out to our new Keywordian colleagues at the back of the room there. Daniel, Elisa and Danny somewhere. I saw, there he is, yep. They're new joiners as of today, coming from Chord and Laced, the music acquisition that we announced. So this is the first time that Keywords is stepping into the whole field of music for video games. We kind of lead the space in video game voiced audio, and now we're able to bring a whole new service experience to our clients thanks to the expertise that Chord and Lace have developed in music services overall. So if you get a chance at the end of this, grab them and ask them all the questions you want about those acquisitions. We've also announced today the acquisition of Maximal, which we've spoken about. So VMC is significant for us mostly because of the scale it's brought, but also it has brought with it a couple of new ways of delivering services. So on the functional testing side, it has this operation called Global Beta Test Network, which means that we can now test games in the wild with real players at home, using their own equipment, their own ISP connections, and if necessary, their own credit cards and so on, to prove out the performance of games just before they go live. And as you know, with pretty much all games now having a very large sort of server multiplayer component, while we can simulate a lot of that in our laboratories, it's only when you get out into the wild that you can really prove it out. So delighted with that. And also with their embedded technical services business, which now gives us the ability to deliver our services inside our client premises. So they're something of experts in that field. Sperasoft 2 brings with it another way of delivering our services. So the model of code development, in which it works hand in hand with the clients to actually produce games. For instance, it worked with Ubisoft. Ubisoft had 5 of its own internal studios working on Assassin's Creed, and Sperasoft was the 6th and final studio that worked on Assassin's Creed. So this model in which you can produce games across a distributed number of locations and teams is one which is becoming increasingly important as games get bigger and bigger. You know, they're almost too big now to do in a single location. So just talking through the individual service lines a little bit. So art creation, which, as you know, we started in 2014, that grew strongly by nearly 60%, thanks in part to a couple of acquisitions that we made during the year of Spov and Red Hot. Not really impacting the numbers because it came so late in the year is also Sperasoft, which has a fairly large art component within it. I think it has about 100 odd artists out of the total 400 people at Sperasoft. Audio services, again, up in actual terms. Underlying, however, this is the one service line which has actually gone backwards during the year if we look at like-for-like revenues, largely because of a very strong comparative for Synthesis that we've already called out in previous announcements. So Synthesis, as you'll remember, had a storming first half of 2016 and actually finished the year in 2016 pretty strong overall. So that dampens the organic growth rate for audio services. Localization testing, which again this year, a bit like previous years, has grown relatively modestly. It's grown only 3% on an underlying basis. But overall revenues have increased to 22% thanks to full year contributions from Synthesis and Enzyme, and also a couple of months of contribution from the VMC acquisition. Our localization business, which as you'll remember is our translation business, Translation Plus, because it's really about adapting content rather than pure translation. And that, again, has benefited a little bit from acquisitions, but perhaps not as much as some of the other service lines. And it has grown 20% on a like-for-like basis and 30% on an overall basis. One of the things to call out here is the Xloc acquisition that we made in 2017. This is a software product. It's a content management system very specifically related to managing textual content for video games to allow those contents to be localized and to be properly integrated back into the game engine. Functional testing, as I showed you on that slide earlier on, has grown very strongly organically, but also been very much affected by the acquisition, positively affected, I should say, by the acquisition of VMC. So top line revenue growth of about 250%, but underlying growth of 50-odd%, which is fantastic to see. We've also invested in one component of our functional testing business, which is this player research, human factor experts that can guide our clients through games and trying to iron out kind of pinch points and points of friction that players experience as they play games. And you know, some of those friction points are enough to throw players out of the game, and so you lose a player. Very, very high-end service, very much in demand. And we've just expanded into Montreal, where we've created a playtesting laboratory for player research. And that's already filling up nicely with work. Our engineering business, as I've already mentioned, very exciting development for us as a business, and going forward you'll see us making more investments in this space as we bring it up to scale within the context of the wider Keywords business. And customer support, which is obviously becoming increasingly important as games move from being a product to a service, that has responded well to our message of, you know, guys, you really need video game specialist company to support you with this player support, rather than going to, you know, the regular call centers that might also be doing credit card inquiries or electricity bill handling and that sort of thing. So that's worked very well. We've picked up some nice new clients. We've expanded very well in Manila, but also very satisfyingly expanded in places like Tokyo. So onto the strategy. So as you might expect, given the very strong performance that we continue to deliver, we're not changing our strategy one iota. We're just continuing to deliver against it, as we have done, well, since 2009, but certainly since we floated the business in 2013. So we continue to develop stronger and deeper relationships with our customers for outsourcing services, and as I've already mentioned, those relationships are trending more towards strategic partnership and less just simple sort of throw it over the wall, project by project service delivery. In terms of service extension, well, we've already got in the room today proof of that message, where we've extended our services into the music business. And we're looking at extending our services also in specific service lines, existing service lines, into areas of capability that we don't currently have. So while we do visual special effects already, we don't do it, we're not famous for it, and you know, we're always on the lookout for opportunities for acquisitions that will help us achieve that fame. Likewise, game trailers are an area that we continue to be interested in. We've got a little bit of that business through the acquisition of SPOV. We like what we see, and we're looking for additional capacity and expertise in that field. Our single language audio options for voiced audio, we've already delivered on that Brazilian Portuguese call out that I've got on the slide. Japanese, we opened a facility in Tokyo last year, organically opened a facility. So we're making good progress. Likewise with our geographic reach, I think with perhaps the exception now of Korea, we're pretty much everywhere where you would expect us to be, given the shape of the games industry and where the talent pools sit. Certainly more opportunity to expand in Eastern Europe. We're currently now in Poland. We're expanding further in Poland with a customer support facility as we speak. But we've got areas of the world that are still very interesting from a games talent point of view, places like Romania, for instance, where we don't have any presence. And actually where quite a few of our clients do have operations. And as far as acquisitions go, you should continue to expect us to make a good number of acquisitions each year. We're sort of set up to do that now. We did 11 last year. I'm not saying by any means we're going to be doing 11 this year, but we should be doing somewhere between 4 and 10 acquisitions every year as we continue to consolidate the highly fragmented market. Called out some areas where you should expect us to make these acquisitions. I think first and foremost is the whole area of engineering and code development. Coming on the back of GameSim, D3T and Sperasoft, we like what we see. We see tremendous demand a lot of momentum building in the direction of co-development. So you should definitely expect us to make some acquisitions there. Music services are on this slide. We don't know yet because our friends at Cord and Lace are brand new in, but there may well be further acquisitions that we make in that space as they can share experience and advice with us moving forward. Analytics, those of you that have been in these sessions before will know that it's a hot favorite of mine, but we remain on the lookout for opportunities to invest in video game analytics. As games are now a service, being able to make tweaks to those games in live operation and to perhaps be able to influence the behavior of individual players so that they're less likely to leave the game is very, very important. And so, we look for ways in which we can enter that market. And I think that's about it. I've covered the rest. So, in terms of key opportunities for us going forward, David's already given you the guidance here, but definitely further acquisitions in a number of these spaces. We're always, and we're very sort of keen and strong about this, is we only want to buy companies, we only want to invite companies to join the Keywords family that really fit with the Keywords family. So there are lots of good businesses out there that just have a different culture to ours. And we try to invite in to Keywords those that actually fit very well with us from a cultural standpoint. It's a big part of the glue that holds our group together. And then, of course, the strategic alignment in terms of what they're doing, who they're doing it for, where they're doing it, and looking for companies that have got a strong reputation, that have been doing this for a while, and that are going to enhance the overall reputation of Keywords when they join. An area which we're seeing more and more sort of interest in and more traction is our clients looking at simplifying their businesses, looking to focus on what really makes a difference to them, which is about their IPs and their ability to monetize those IPs across different platforms and different monetization models. The way the industry has been built, as I said, it's a very young industry, it's only 30 years old, so a lot of this has been built organically, and they've developed into very vertically integrated businesses, quite a lot of our clients. So they are doing what we do internally as well, and increasingly we're seeing evidence of clients looking at ways in which they can perhaps outsource complete operations to ourselves, which is what I'm referring to here by client spinouts. We do work outside of the video games industry. People come to us. We don't hunt for that work. We're very focused on the one single industry, but we do increasingly do little bits of work on particularly virtual reality and augmented reality applications that take us outside of the video game space, whether that's into the worlds of civil engineering planning to bring to life big projects for community outreach purposes, whether it's working with architects, whether it's providing interactive learning experiences and so on. So, and we're doing work in the retail space as well, for that matter. So quite a lot of crossover. We've always said that working in the game space is sort of the pinnacle in terms of interactive content. There's nothing more interactive and difficult than a video game. And now what we're seeing is that a lot of content types are coming towards the games industry for the sort of expertise to make their content interactive as devices like augmented reality and virtual reality start to have an impact. So for me, this is the major sort of part that when people ask me, usually in investor meetings, what keeps me awake at night, I can honestly say that the one thing that does keep me awake at night is the excitement of the sort of the future and the momentum we feel. And I'm always thinking, oh my God, how are we going to expand to take advantage of this opportunity and so on. So it's just a question of how fast we can run to keep up with the demand that we see in the market. Very, very nice major project wins very early on in this year for our new co-development services, which are very encouraging. Having just acquired businesses like D3T, GameSim and Sperasoft, our teams have managed to introduce projects to those companies that they would not otherwise have seen, and they've come from our existing client base. So very high demand for those services, and being part of the Keywords sort of umbrella of families has really meant that our existing clients find it very easy to go to these companies within the Keywords family for those services. Continued progress with cross-selling, as you would expect us to do, given the number of services we now have within our palette. And as David said, I'm the one that's out there doing most of the acquisition shopping. I can definitely tell you that the pipeline for acquisitions is as strong as it's ever been. Final slide before we break for questions is just a little summary of the investment case for Keywords. So it does provide investors with access to a large high growth market, and it does so in a way that is not dependent on the hit or miss of any particular game. We are the picks and shovels of the video games industry. Our key growth drivers are obviously the market growth, which is growing at about 6 to 8%, but perhaps more importantly for us is this continuous and higher definition content and the overall trend towards outsourcing. At the moment, only about 50% of the services that we provide are outsourced in total, and we see that trending towards more like about 80% over time. Just as a reminder, in the film and TV industry, the outsource penetration is about 95%. So, as a business, we've delivered time and time again on expectations. We hope not to deviate from that anytime soon. And we have strong organic growth, and then have got a very good reputation for making wise acquisitions which we get on and integrate well. Our geographic reach is second to none, and we have the business model with its fairly simple professional services fee income. The work we do during the month we bill at the end of the month, and we receive 30 days later, which is nice in such a complicated, what is otherwise a really sort of complicated to understand industry like the video games industry. And we have a management structure which supports that growth, both in terms of organic growth and in terms of acquisition. So I'm going to leave it at this point and ask if there are any questions. Will.
Morning. Could you talk a little bit more about the co-development opportunity, what that means in terms of the relationships with your clients? What's it mean in terms of the duration of the contracts, how well you're sort of linked through into your clients, et cetera, et cetera? Yeah, absolutely. So co-development comes in different shapes and sizes. So for us, the definition starts at things like remastering projects, so where we've got an existing back catalogue title and the client comes to us and asks us not only to port it to current generation, which if it was just that we wouldn't include in co-development, but when they want us to do that and then also to add additional features and so on to the game, then that becomes co-development. So that would be the starting point. But it's also situations like I mentioned with Ubisoft, where we are one of the studios working on the launch of a new game. And it's also kind of full game development, where a client can come to us and say, can you just make us a game, giving us the sort of creative outlook for the game, and then we go off and produce the game. So those engagements are anywhere between, let's say, kind of 3-4 months to two years or more. They obviously put us in a very sort of high level engagement with our clients. They're strategically very important to the client. The client is relying on those games to come out so that they can generate revenues from them. Thus far, the way in which we've been doing those co-development projects, which is what's referred
how the market in general refers to them is kind of putting the art and the engineering together in a packaged, integrated delivery. Obviously, with Keywords now we're able to stop not only at the art and the engineering, but also put in the audio, the music, the testing, and the localization, and so on. So we expect those engagements to get bigger over time. And obviously, the visibility that we have, having been selected for one of these projects, we know that the rest of the work is going to flow from them as well. So, you know, very exciting for a number of reasons, not least of which because you can imagine being a client, if you're sitting on, you know, a bunch of back catalogue material and you're trying to find ways in which you can get content out easily, having a competent supplier that can take that back catalogue material, reimagine it, refresh it, bring it to market, all fully packaged without impacting the sort of the internal costs of the company and the internal workforce of the company is very attractive to them. So I think it's just going to be a question of how fast can we grow that capability and the headcount that's capable of delivering those projects to accommodate the demand that's out there. Some of the demand is latent at the moment because people aren't asking for it because it's not, you know, it hasn't been available very well.
Just three for me. Thank you. So just three. So firstly, at H1 you increased sort of the capacity within sort of bums on seats quite a lot. Where does that leave you now? Is there sort of room to grow into, or will you soon quickly have to do that again? Next one on pricing, as it goes from tactical to strategic, maybe more co-development sort of type services. Does that leave more pricing in your hands rather than the other way around? So where's sort of the pricing going on that respect? And then on esports, said you're looking at ways in which to monetize this in a more meaningful way. Some color around that would be quite interesting.
Yeah, so in terms of the expansion, so yes, we have expanded quite a lot last year. As I've already alluded to, places like Tokyo is already filling up fast. I think, you know, we always have the opportunity of sweating those assets a bit more rather than necessarily just going in and acquiring more space. But I would love to have the problem of having to acquire more space. That's not a bad problem to have. So, you know, if that happens, that's great. But we are continuing to make investments in various parts of the world as we continue to grow organically. So that should be a sort of ongoing feature. It's just that last year, you know, quite a lot of these projects came together at the same time. Can't remember the middle question, but the end question was about esports and have we found a way to monetize that? We don't break it out internally because we just get on and do the work. But there is a good amount of work that's coming to us, particularly in the sort of localization field, that is specifically related to esports, where we're supporting the marketing content that goes around these big events. We're also doing art for specific marketing art for these events through our art teams. You know, we've even done things like live translation of events where there's been a lot of commentary and so on, and for the non-English players, that content has been localized in kind of real time to get it out to them. So there are definite sort of direct impacts from the very fast-growing sort of esports market. I'm not sure that anybody's really found ways of making money out of esports yet. I'm sure it's going to come particularly through advertising. For us, we continue to look at ways in which we can play a more meaningful role directly in that market, but we haven't got anything up our sleeves just yet.
So the middle one was on pricing as it becomes more strategic.
Yes, logically, you know, as we are able to integrate our services together and reduce the sort of effort required on our client side to handling what would otherwise be discrete asset deliveries. So we should, obviously, we're adding more value to the overall service. So logically, we should be able to share some of that increased value with our clients and hopefully price our services accordingly. Yeah, Dan. Oh, sorry. Yeah, Ash.
You had a GDC last month. Were any of the key takeaways for Keywords different to your expectations or previous years?
Yeah, it's kind of interesting. So we had what I would describe as our best ever GDC. We really felt as if we had arrived in a way that we perhaps hadn't done thus far. So it's rather a sort of question of sentiment, of feeling how we as Keywords felt. But yeah, we had the biggest presence there that we've had. We had a very nice stand, but more than that, we were clearly, becoming this go-to player. So, everybody was hanging out with Keywords. It was also helped by the fact that we had a damn good party. Sorry, Dan.
Yeah, looking at the functional testing service line, it grew by 52% like for like, and that included VMC, which I don't think grew anywhere. Grew anywhere near like that. I was wondering I'd just like to know explicitly what was really driving that, and whether that's something that was exceptional, or whether that will continue going forward.
Yeah, I think it's again, we're becoming the sort of player of scale. So we're seeing more bigger projects, but also I think what's happening is functional testing for some reason has been very much an insourced activity in the West, which is at complete odds with what happens in Japan. Japan, for instance, functional testing is almost 100% outsourced. And I think what we're benefiting from is a bit of a swing towards more of an outsourced model for functional testing. So I think it certainly won't be growing at 50-odd%, but we should expect to see continued strong organic growth in that space. Even though, the lack of growth historically in VMC might tend to dampen it a little bit.
In terms of your audio services, could you give me an idea of what sort of percentage is recurring, and if it's seasonal, especially for sort of games that are, have very seasonal events, and how that works out?
Yes, no, you're absolutely right. So audio in games, you're starting to see more and more audio come into mobile games and sort of, let's say, games that have a more continuous nature to them. Whereas historically and still today, a lot of audio really is reserved for the very big AAA games. And those do have a release cycle. They're released in time for the holiday seasons. So there is a bit of seasonality in the audio business, perhaps even more than we see in any of our other services. So yes, that will continue. But again, there's this sort of evening out thing that's happening as audio goes into more and more games as the devices become capable of holding and processing heavier content, richer content. Oh, no more questions. Well, great. Thank you very much.